Okay, hello there, traders. Welcome to all traders to my Wednesday's webinar by Bretton. I am Kenny Simon, and these webinars on Mondays, Wednesdays, and Fridays are sponsored by 10 Academy. So welcome to the dashboard as well on 10 Academy, and we'll go through, as usual, the analysis both fundamentally and technically with me and through the PRICE or price trade plan as well, to actually analyze the market in a balanced manner between fundamental and technical. So I hope you guys are doing well today. We are already at midweek, hence it's the Wednesday's midweek webinar, where we are usually going to be looking at troubleshooting your trades, especially with your current positioning and positions of trades. And then we'll take it further into looking at whether or not the market is giving us extra or more trading opportunities, depending on what's been moving in the market or what have actually moved the market, in order to understand which instruments are best to also pick out for the day. Now, I know that most of the traders have actually gone into GBP trades as well, some gold trades to go into, have actually participated in the buy trades for gold especially. So there are several concerns about where are the resistance levels, as well as whether or not there will be a trend continuation or a trend reversals in most of the traded pairs, especially all the instruments that most of the traders are trading at this moment of time. So what's really important is always to look at the step one itself of the PRICE trade plan. So the letter P itself stands for psychology of the market. Basically, it revolves around sentiments of the market, whether or not it's a risk-off environment or a risk-on environment. This is really important for us to understand in order for us to know which are the right pairs to actually trade for the day, or which are the trends, whether or not an uptrend or a downtrend for several other instruments that are correlated to the other instruments as well. Now, as we can see on the portal itself, let me just share my screen as well. So I'll share the screen, right, Andres? I'll share the screen myself, yeah? Yes, okay, cool. I don't know where am I now? See. Okay, I think I need to get into my Zoom again. Give me a second. No. Is my screen shared? Okay. Okay. Give me a second, guys. I'm just, yeah, already. Okay. Let me just share my screen. Oh, it went away again. Not sure why it went out again. Share screen. Let me see whether, okay. It needs to enter the key ID as well. To try again. Just 1 second, everyone. Okay, I think I've shared screen right now. Hi there, guys. Hope you guys can see my screen. Yeah. Okay, brilliant. It's recorded as well, right? Yeah. Okay, perfect. All right, everyone. So what I'll be doing right now is just to check on the FX heat map first on the 10 Academy's dashboard. As you guys can see, this is where we would use this tool, this particular tool, in understanding where the concentration of traders, buy traders and investors are towards which instruments. In order for us to do that, what we can do is to eye on the red and the green squares that you can actually see, but focus on the currencies on the left. So all these currencies on the left, we want to look at it as a horizontal type, what do you call that, layout. So here, for example, if we're looking at GBP, then we look at the highlighted red boxes. Then these boxes means that GBP is bearish against USD, because the USD is at the top here. So GBP against USD bearish at 0.52 or 0.52%. Negative, meaning GBP is on the sell side, and the same goes for GBP JPY, and not the other ones, not the GBP Euro, GBP CHF, GBP AUD, because they are not highlighted, so they're not really active at this moment of time. So it's probably best to only look at the highlighted ones, the bright red or the bright green ones. So GBP versus USD, GBP versus JPY. I think from the GBP horizontal row itself is pointing out at Australian dollar, if I'm not mistaken. I've actually alerted the groups as well, talking about Australian dollar's downside pressure at this moment of time due to the Royal Bank of Australia's announcement of hiking rates and various other things that they're actually doing. And that is then keeping the Australian dollar at this moment of time at bay, and also going through some bearishness as of early this morning during the Australia's Open. So here we are looking at GBP alone. Looks like it is quite bearish against the NZD. NZD, as of this morning, has actually given loads of hints of its upward trend, not able to battle the inflationary mode. So it is actually on the rise. And when we look at NZD per se, it does actually look like NZD is giving loads of opportunities on the buy side for NZD. So hence the reason we need to pick out the right pair as well, in order for us to understand that these are pairs with strong and smooth and clear trend. This is the most important thing. So within the NZD row, for example, we have got the 0.68 as the highest number that we can see against GBP. So that could also pose a possible probable opportunity to not trade straight away, but to actually go onto the chart and look at GBP NZD and see whether or not we have got some clear, smooth and strong trend, especially on the buy side for NZD. So that means it's bullish bullish on the NZD and bearish on the GBP. So these are one of the things that we can actually take a look at and start looking at opportunities to actually trade. Before we go on to the pairs that we have actually discussed on Monday as well, especially gold, GBP crosses, because it's good to actually look at past trades and look at past whether failure of trades to reach a TP or successful trades to reach a TP, and sort of do a little bit of a dissection of information to understand how did we arrive to that successful trade, and what actually went wrong with the trades that didn't actually or reversed earlier, for example, and things like that. So we'll do a post-mortem of these trades, especially the failed trades, if there were any. But before that, it's probably best for us to start picking out some pairs to actually analyze and look at whether or not we've got some opportunities to trade today. So let's start off with NZD, as we looked into the news as well here on the dashboard itself of 10 Academy's dashboard. On the news option, for example, we are looking at loads of concentration of the news on the Royal Bank of New Zealand, on New Zealand's raise of rates, and also the combination between the Australian dollar and the New Zealand dollar as well. And here you can see there are 4 to 5 boxes are all talking about New Zealand dollar especially, and also the Australian dollar. Now we see that the concentration of interest is along these lines with all these, we call them antipodian currencies. Antipodian currencies usually involve the New Zealand dollar and the Australian dollar. So sometimes when you look into the news, they'll just talk about antipodian currencies, and that basically meant that it was news for Australian dollar and New Zealand dollar. Okay, just so that you guys are aware, the next time that you hear about this word antipodian, doesn't mean anti anything. It just basically talks about Australian dollar and New Zealand dollar. Okay. Now, the next big thing as well, apart from the rate hikes and the announcement by central banks in both New Zealand and Australia, we are also going to be heading towards the NFP, which is one of the most important data coming out this Friday. So that stands for the non-farm payroll, employment figures, blue-collar workers, and all that in the US. So the NFP happens every first Friday of every month. Now, it's really an important data. It gauges it's a gauge for the US economy as well, the current employment and unemployment situation that goes on in the US. So it's really important. That's coming up on Friday. But usually before the first Friday, before the NFP announcement, we have got the automated version of the NFP, and that's called the ADP. So as you can see here, we have got payrolls news here, for example, and if we look into the economic calendar, you would see that we have got 2 very important data coming from the US. That's the ISM data, but also the automated version of the NFP called the ADP. So usually after it's been released, then we've got some news coming up in the mainstream media as well, talking about what is to be expected in the farm payroll, non-farm payroll data coming up on Friday. So it's interconnected, intercorrelated as well. What happens on a Wednesday before the first Friday of every month when the NFP is going to be released. Okay, so there you go. We've got a little bit of an idea on the news side of it, and hence the reason I have also reminded most of the traders that we don't usually go straight onto the chart to conduct either technical analysis or any form of analysis when you look at the chart straight away, because that would then distract you from the main fuel of the market. The main fuel of the market are data releases, important, high impact data releases in the economic calendar, also news releases about economies, interest rates, talking about the data as well. All these ones has to actually be looked over and understand what are the top news, breaking news. Maybe there's a calamity in the market. There's a movement in the market caused by act of God or natural disaster, storm or whatever. So that's why it's really important to firstly look into the news on the headlines alone. It's not necessary to just get into every one news and then read and understand, because there's just no sufficient time to do all the research from a Monday to Friday during trading time. It's like during working hours, you want to just concentrate on your work. So that's the same for trading as well. You just want to get into it, do minimal research and analysis within 30-minute span or so, maybe even less, 15 minutes to 30 minutes, to just understand what pair to actually trade through understanding the sentiments of the market, whether it's a risk off, risk on, and various others. Now, talking about risk on and risk off, before we move into some of the pairs that we can analyze straight away on the trend, based on a trend analysis, we can always go on to the heat map once again and look at safe havens. And when we look at safe havens like JPY and CHF mainly, we want to look at whether or not there are a lot of buys or a lot of sell. Now, if there are a lot of buying activities, meaning that if this whole row on the JPY, Japanese yen, is actually green, a lot of green boxes, highlighted bright green boxes, that means that a lot of traders and investors are paying a lot of attention in buying the JPY. When they buy a JPY, and JPY is a safe haven, that basically means that the market most potentially or probably is in a risk-off environment. That means they are turning off their risk appetite. They want to be more careful, so they are actually trading safer they're trading safe havens or safer currencies, and they want to avoid being into too much exposure on the risk side of things. Okay, so the same goes for CHF. Are there a lot of bright green? So at this moment of time, not much what do you call that, bright green on both JPY and CHF, but lots of bright green horizontally, as you can see, for USD. So that does also still mean that USD is on the upside, driven by inflationary mode, of course, and also some positive data potentially. Excuse me for that. Okay, so this is basically where we stand at this moment of time and looking at USD. And now USD, a lot of questions coming from traders as well, is that is USD a safe haven? Now, USD is definitely a safe haven, but it depends on the situation or the market conditions. What I mean by that is when we are in pandemic mode and there are shutdowns in the US or shutdown in various other countries as well, and it's actually driven by the pandemic and the COVID especially, we have seen that USD would actually then switch into safe haven mode. But at this moment of time, we are sort of cleared away in a way from all these threat on the COVIDs, and many countries are having shutdowns and various other things, or cases multiplying and stuff like that. So USD is back into its normal mode, not really classified as the safe haven for now in this market condition, but it is basically driven by inflation that is going on, that is sort of out of control at this moment of time. They're doing their best they can politically and also economically to apply some of the tools, but then we're talking about monetary tightening, monetary easing and stuff like that. So there's a lot of tools that are coming into the picture, but as we can see on USD, it is still proving that it is on the upside, and we have got USD against GBP that seems to be quite strong. So GBP USD is probably good for us to look into the trend analysis for GBP USD as well, because we can see that GBP is really weak against the USD right here. When we go on to USD, the same thing goes with it as well. It is actually quite, it's increasing its bullishness, as you can see, USD against the GBP. And then when we go on to GBP against the USD, it's increasing its bearishness as well. You can see that the numbers here are going up and up negatively. So GBP is weakening against the USD. So this is probably a good pair for us to do a trend analysis, especially with major pairs. I've also mentioned to most traders today that it's probably a good time, when you're conducting your analysis, to notice that major pairs or pairs that are against the USD would probably be better pairs to actually analyze further in terms of trend analysis. Okay, so also because of what is to be expected from the economic calendar side of it, we have got more concentration on USD, for example, basically data coming out of the US, and especially because we are gearing towards the NFP coming on Friday, and we've got the ADP coming up as well soon. today. So let's pick out one or two pairs and then start doing a little bit of a trend analysis. We'll start off with major pairs first. Of course, Euro USD would be good, but then because of what's been going on in the market with how the central banks have actually dropped rates and various other things for Australia, New Zealand, antipodian currencies, we need to focus on them. Also, GBP from carrying out what has actually happened from the start of the week, and also USD, of course. Now, so for USD pairs, as we can see, we have got quite a number to choose from, but I think we can actually start off with GBP USD. So this is when I would then move into the charts and then start a trend analysis first on the GBP USD. So we are also able to look at all the levels that we've looked at and reanalyze GBP USD once again, because we've also looked into GBP USD quite a lot starting from Monday due to the expectancy of a housing crash, which still can actually go on, is just being cushioned a little bit with some of the things that the UK government is trying to cushion that, but probably a recession is unavoidable for the UK. But let's take a look at what opportunities are there for us to actually enter into for the GBP USD especially. Now, GBP USD, let's just go on to the Centred platform here on MT5, and we just switch on to GBP USD. This is the 1 hour chart for GBP USD. Let me just start afresh by deleting the lines that we can see on the chart itself. Now, for GBP USD on the 1 hour chart, we're looking at the 1 hour chart right now, and let's focus on conducting a trend analysis first. But just before that, we want to lay out both the upper psychological number line and the lower psychological number line to have the current price right in between two psychological levels, just so that we are safer to understand where we are at with GBP USD in terms of price action, price location, and to make better decisions on whether the breakout is going to be to the upside or downside. Now, let's do that. We are trading at the moment for GBP USD at 1.1385. So 85 itself is just within 5 pips or so from the 80 psychological level. So what we do is, imagine if prices were to go up, we want to lay out one line, a single horizontal line above the current price based on the psychological number. Now, the best psychological number closest to the price now on the upside would actually be 1.1400. So I will draw that horizontal line. I'll draw the horizontal line at 1.1400. Okay, so here we have got 1.1400 right there. So we've got a single horizontal line marked using the principles of psychological numbers at 1.1400. That's on the upside of the current price. Now, at the lower end of the price, it's probably best for us to mark the 1.1350 area. So that would give it a little bit more space because it's just too close to 1.1380 psychological number. So we'll take the next one down, which is 1.1350 instead. So now we would have two psychological numbers with current price trading in between two psychological numbers at 1.1400 and 1.1350. Now, these two lines of your psychological levels are marked in blue horizontal line, as you can see on my screen. Now, we could see that on the 1 hour chart, we'll travel across the 1 hour, 4 hour, and daily to do a trend analysis. But the most important tool that you would need to conduct a trend analysis are the three exponential moving average lines, or better known as the EMA. Now, we have got three lines pointing upwards at the moment. Majority of candles are above all the three lines, but the current price action is falling down. Now, usually, if we've got three lines pointing up nicely and the current candles are above all the three lines, it's probably best to also experience movement of prices to the upside. But at this moment of time, there seemed to be a bit of a correction coming downwards. So GBP USD on 1 hour chart is bullish moderately, or maybe poorly bullish, mainly because of the current price is actually falling. So in order for us to understand whether or not it will be more biased to the upside or downside, is the break of either one of that psychological number. So right now prices are actually falling. Now if it does actually fall down towards 1.1350 and go under 1.1350, it's a good strong signal of a building up of the sellers and building up of the downtrend, mainly because we have got the 1.1350 right on the dot of the 200 of the 50, not 200, but the 50 exponential moving average right here. Now this exponential moving average, any one of them could also act as a support and resistance line. Now, as you can see, how prices could potentially respect and bounce up from either one of these lines as well. As you can see, he's got support here on the 50 EMA, another support on the 100 EMA, and then loads of candles here, have used the 50 MA right there as a resistance, and it fell from there. So the same thing goes as of now as well, whereby it could also bounce up here, find support at 1.1350. Hence the reason it's really important for us to always mark the two psychological levels based on the current price, one at the top and one at the bottom. So in my opinion, it has a potential for it to actually reverse here, making the 50 EMA as a very strong support level, but together with the EMA, it is coincidentally on the psychological level of 1.1350. So these two, factors could potentially make the GBP USD reverse on the 1 hour chart, but we don't know that just yet. We would like to only know the trend at this moment of time. So let's compare it to the 4 hour chart. Now with the 4 hour chart, when we look at the single candle itself, it has already started moving under the 200 exponential moving average, which is a sign, a very clear sign for it to actually give out signals of bearishness, because it's under the under the single 200 exponential moving average, which is a very heavy line. Why? Because it measures 200 trading days, 200 days of movement. So that's why it's called the average movement. So it's called the moving average, right? But this is an exponential moving average, which basically is reading out to us a more sensitive sort of arrangements within, statistically, of course, with that indicator right there. So it is looking like it's got more power to come downwards, mainly if you see that the current candle itself on the 4 hour chart has got a wick at the top. So that wick at the top usually signals weakness to go to the top, right? So that is where it's the same for wick to the bottom. Now, wick at the bottom of that candlestick means that the longer the wick, the longer that line, the longer that needle-like formation, then the weaker the movement is going to be to the downside. That basically means sellers would actually be, the longer the wick to the direction, that direction would actually be slower, or would be dying down with the interest from respective buyers or sellers. Okay, so here it does look like it's picking up to the downside. Maybe market is weakening from the upside, coming downwards much more. This is for GBP USD. Now it's entering, in within the three lines as well. So the three lines are moving now sideways. So in terms of trend, it's not very clear. The trend is not very clear at this moment of time, but the movement of, sellers are participating more in selling than in buying, mainly because of how current candles are actually moving. Current candles looks like it's preferring or dominating the selling scenario more than the buying scenario. Okay, now let's compare the 1 hour and 4 hour to the daily chart. Now, when you look at the daily chart itself, it's quite clear that you've got three lines pointing downwards. If you zoom out a little bit, you get that bird's eye view of how smooth smooth that downward movement or the bias to the downside is for GBP USD. Now, it is actually still under 3 lines, but we have got this upward movement, but it looks like even on the daily chart, it looks like a bit of a reversal is going on, and we've got that bearish candle forming as well beside it. So what is important for us now is to wait and monitor the markets for GBP USD, to wait for whether or not candles could actually pierce through the 1.1350. Now, if it does pierce through 1.1350 with a strongish type candle or strongish type mother candle, the body of the candle is going through, piercing through and looking like it's very strong. How do you know whether it's going down very strongly? Also from the wick. If the wick is not there and just the body is getting lower and lower and lower, and there's no wick or this very short wick, that means it's not weak to the downside. It is quite strong to the downside. Okay, so there you go. Now, in my opinion as well, we have got, we're talking about a daily chart. Why? Because when we went to the 1 hour and the 4 hour, things are not clear. So we only would actually look at a chart, doing a trend analysis and making more analysis only on the time frame that is clearest, not the time frame that actually has got lots of complication. If we were to go on to the 4 hour and from the trend itself is not clear, then we want to do a technical analysis and do anything on the 4 hour time frame would most probably be disastrous and very, very risky. You want to do further analysis, whether further trend analysis, further technical analysis, further price action analysis. You want to do the Fibonacci and all that only when it is clearly trending would probably be much better for you. But of course, it would actually differ from trader to trader. There are traders out there trading the breakout, trading, trading by being a scalper or scalping the market short term. It all depends on your strategy, of course. But during this mentorship period of at least about a month with you guys, especially guys and girls who have actually attended the seminar as well in a.k.a, it would probably be best for us to stick to what has been in store for you in terms of the PRICE trade plan that's been introduced by myself. So this way we would then be able to monitor one way of doing things, that methodology of doing things, whether or not it has actually been effective. If we are to combine strategies at this moment of time, mine and various others and all that, it would probably be a little bit more confusing. But what you can do though, within the price trade plan, once you have picked the right pair, following my style of doing things and also following through the price trade plan, only after that you are able to use your own tools and indicators to sharpen your analysis. If whatever that you are actually using, applying in the market, whether it's a strategy, methodology, indicators, EA, whatever that is, if it is going to sharpen the entries and exit and give you more clearer information about the trend and the strength of the currencies as well, and also reversal areas, then by all means apply anything that you would find helpful and basically effective in polishing your analysis and making it more solid. Okay, all right. Now, as we can see on the 4 hour chart, we have got this single candle right here has got the wick to the upside. Now, that is basically not a very good sign for the upward type movement or trend, but we have got the 3 lines moving sideways as well, and the prices are entering the 3 lines. It's not really good in terms of trend. Now, what I can see as well is before we do that, we need to go onto the daily chart as well, just to make our observation there. Okay, now here as we are at or in within the daily chart, you can see that we have got dominance of single mother candle much lower. Now that dominance of a presence to the left, you need to look to the left for that, and you notice that you have got a visually very attractive mother candle that is probably the longest, biggest mother candle that we can actually find, and that is a bearish mother candle. What that actually means as well is, if I were to zoom in a little bit, now this is for GBP USD on a daily chart. That body of this mother candle itself, let's see how much it's worth in terms of pips. That's about 400 plus 410 or so plus pips only on the body. It's got very short wick at the top, very short wick at the bottom. When you've got short wicks at the top and the bottom, or no wick at all, that basically means that that candle has experienced very decisive movement by sellers, because this is a selling type mother candle, right? So the sellers were very determined at that time. The sellers were very powerful at the time. So it has actually brought down to 400 pips plus just within that mother candle, or the body of that mother candle itself. So what does that mean? That means that we need to mark this area based on the opening price of the mother candle, right? I'll mark that in red. Okay, so we have got that. That's the opening price, because it's falling down. So you got an opening price at the top, and then you've got a closing price at the bottom on the body of the mother candle itself. Now I will mark this as blue as support on the closing price of it as well. So we've got a bit of a zone at the moment. Let me just. Okay, there you go. So we have a range. I'll color this one here blue as a support area. So the opening price of that bearish mother candle is your sort of resistance there, right? Now, as prices fall, if it does actually later on fall, then it falls to the closing price of that mother candle. That closing price would then act as a support as well, right? So I like using closing price and opening price in addition to my resistance and support analysis. Okay, so here, for example, we have a bit of a range. Now this is on the daily chart. Of course, we've got price now, really close 1.1400 area. We just want to see what it's doing in that area, whether or not it would actually fall down more. If it does actually fall and become more and more bearish, then it's probably best for it to firstly come into this area under 1.1254. Now that upper line drawn at the opening price is only pips away from the 50 psychological number. So the ideal price of entry, if we want to sell, is to wait until price goes under 1.1250, at least by 10 pips. That means your ideal sell will only be later on, not now, because it will probably still take time. We've got the 1 hour and the 4 hour chart not giving us very clear information on the trend. So the trading zone area for a sell, like a sell zone, is only within this area of 1.1240 to enter the sell at 1.1240, basically under the 1.1250 psychological level, and to actually exit before 1.0850 as well. Why? Because here this line has been drawn at 1.0847. 47 is only 3 pips away from the 50 psychological number. So what that means is, if we were to sell, it's probably best to sell ideally at 1.1240. This is a pending order possibility. And then you want to take profit only at above 1.0850. So 1.0860 would probably be a good exit price or exit area. Okay, so here, for example, we have got let's just give me a second. 1.0850, so 0860 instead. So that is, I'll just mark that as TP and okay. There you go. Right. So now with the entry would actually be at 1.12, right? So 1.1240 instead. So there you go. I'll mark that at 1.1240, and that's basically it. So then I pull this one here, just mark that one there. Probably best for me to sell entry at 1.1240. Okay, there you go. So that area itself this pips, as we actually mentioned, it's worth 400 plus pips. So we're not taking all that 400 plus at one go. It's just doing a trend analysis just to mark where we can actually sell in terms of the territory, and then go to your lower time frame depending on your equity level as well, in order for us to trade shorter term. But at this moment of time, the problem is the trend is not clear for the downtrend for GBP USD at the 1 hour and 4 hour. What does that mean? Very simply, it's not trading time. It's not to trade at this moment of time because the trend is not clear. Hence the reason, if the trend is not clear and you're still trading into it, then you might get a little bit trapped, or probably get a bit confused with the current conditions of the market, and also with what you are looking at on the chart itself. So that is basically a very, very crucial area or mindset to actually adopt, is to always conduct a trend analysis first before we go further. Now we have 1.1254, as I said it earlier on, right here as a top area, marking the what do you call that, opening price of that mother candle. Now that mother candle is very obvious, very strong, so that selling zone is all over this area right here, yeah, in within 1.1254 right down to 1.0847. But of course we need to tweak the current price a little bit to psychological numbers, and then ideally, you know, write down or type out the ideal prices. You can always enter the trade with a pending order from now, as well, as prices are still quite far away from the downside, okay? Because it could also reverse here and then start to create different other patterns. So it's probably best for us to enter only after it starts to come down a little bit more, breaking out from the 1.1250 psychological level. Then we can see that we've got opportunities to sell much more. Okay, so here as well, I would just like to mark it. We may have a geometric A, B, C, D to the downside as well. So here, for example, if I were to use a Fibonacci, we'll be having all the videos as well very soon, and it will explain each one topic clearly. Now here, this is 78.6% of the Fibonacci retracement. We've got A point here, B point here, and that's our C potentially. The C point here has not reversed very clearly. So I would imagine that if it starts to enter 1.1254 and under, then you've got a good selling opportunity for the GBP USD. So I'll just continue in drawing the ABCD geometric pattern right there. So A to B, and let's say B to C is here. The C point has to always be closer, always be lower than the A point, cannot be higher. It has to be a lower high on a geometric bearish pattern. Okay, so all you need to do then is double click on A to B. This is A, B, C around here, right? We can always click on to control and then okay, now we'll get that down here. Okay, so this is a geometric ABCD pattern potentially, and we have got an ABCD. So it's important for us to understand and know that the C point, as you can see, on a bearish pattern has to be a lower high. So indeed, the C point is lower than the A point. So we've got A here, B here, C here, D. This is only a chart pattern for now because I've not converted it to a geometric pattern. How you convert it to a copyrighted geometric pattern of mine is simply to have a line to the B to the D line, projected D line, right? So you have two ways of predicting the market. Of course, you can use Fibonacci as well to predict the give me a second. All right, I think probably best to draw another line from A point, drag it down to the D point. Now it is called a geometric pattern, because what's important is the AD line intersection with the BC line as well. So we get a cross right here. That cross is your entry area, projected entry area is at 1.0911. So 1.0910 is always a good place to start, but I think it's probably best to look into the entry around this area, of course, but only after it comes downwards here. So before the trading the centroid area right here, you can always sell entry at 1.1240 first, and then you want to take profit there. And once it actually goes lower, under 0.860, then you can trade this geometric pattern right here and take it all the way down to this area of 1.0078 or 1.0080 psychological number. That's actually 1.0079. So this is how a geometric pattern works. So we've got many ingredients to put into the process, but you have to start the process without being out of the chart. If you start straight away into the chart, you might get you might be missing out on a lot of very crucial information out there, especially the news and the data that could actually drive the market or fuel the market. You need that fuel from fundamental. That's why it's F and F, right? So it's fuel from the fundamental. Now, when we come to technical, then it is more the window to the market as well, meaning that we're looking at the chart and everything, but we do a trend analysis first and then a technical analysis. So we need to match and balance up both fundamental and technical to get a better picture, okay, and make a better decision to trade or not to trade. Okay, there we go. It's quite simplified this moment of time in GBP USD, I would think. It's also good for us to look at what's been going on with gold, especially. Now, gold is trading basically at an area that has actually been stuck a little bit, but 1715 area it's trading at this moment. So that means 1 ounce of gold is priced at $1,715 US at this moment of time. Now it has definitely gone to a level up there at 1,727, 1,730, almost 1,740 as well at some point to go upwards the last couple of days. So that is now retreating and coming downwards, mainly driven by what's been going on with US and inflationary mode, and with the US dollar going up and up and up. So that upward type movement in the US for the US dollar has actually promoted and encouraged the drop of gold's prices, and that's been going down a little bit right there. So it's trading now at 1,715, so 1715.11. Now, there is a sign of more weakness to the upside, mainly because of the wick, as you guys can see, to the upside as well. There was a bullish pole and flag type pattern, took it around there. So I have profited much earlier based on that pole and flag pattern as well for gold. Now, what do we do at this moment of time? Now, the best thing to do is to clear up all the mess that you can see on my screen, all the objects that you can see, the lines and all that, and start afresh and look into a trend analysis for gold a little bit, and matching that up, whether or not it matches up with what we have actually read and researched and analyzed on the fundamental side of it. Okay, so fundamental side of it is looking very much more positive in the US and for the US dollar. So that would definitely be sort of weighing down on gold at this moment of time. But most important is not to make guesses. So we want to do a trend analysis for gold and start off with either the 30-minute chart or the 1-hour chart. We can always go on 30-minute chart first as well. It does not matter. When you do a trend analysis, you can do a trend analysis on any time frame. The more the better, because you are comparing and contrasting and looking at whether or not we have a clear picture of the trend, whether or not the trend has got a possibility of gaining its strength and its clarity and its smoothness as well. So there you go. So right now, as we can see on the 30 minutes chart, there's just not very clear trend. The reason why I say that is when you spot the prices and the candles going in between the three lines and they're not above all the three lines, like here, all these candles are above all three lines. The three lines are still quite nicely plotted with, being it separated from each other like a nice flow to the upside. But we need to compare that 30 minutes with the 1 hour chart as well. Now, when you compare that, you can see that the three lines EMA for gold, we're talking about gold at this moment of time on the 1 hour chart, it's still to the upside. Now, it's just that it's got this correction at this moment of time, but we have got a wick on the 1 hour 1 hour chart on this particular candle at this moment of time. It's got a wick to the downside, you see, so this could easily be a pin bar type pattern of candle or candlesticks, and that would usually be signaling a reversal. So hence the reason we want to always keep up the pace and the speed of us analyzing the trend first. Now, it becomes very uncertain on the 4 hour chart, and that's because the three lines are moving sideways. We have got the candlestick still reversing at this moment of time. I mean, the trend overall is on a reversed, and then we have got this wick candle here with a longer wick at the very top. So maybe buying pressure, but it's trying to position itself whether or not it's going towards downward movements and downward or downtrend. So as we go on to the daily chart, we can see that it is still a little bit uncertain as well in the daily chart, but it's biased to the downside more than the upside. You can see that on the daily chart, this whole movement from this high to the low, you can see zigzag coming downwards, lower highs, lower lows. But most importantly, within the movement of lower highs and lower lows, we are looking at a lot of bearish candle as opposed to or in comparison to the bullish candle. So the downward type movement is just heading to the downside, and basically it is more bearish candles compared to the bullish candle. So that entire area has been dominated by bears or sellers. Now we are looking at an upward move. We've got a bit of a high right there. It has taken out some lower highs right here as well. But what is important is now prices is at this area, this peak area right here. So using this peak area of the past here, you can actually literally draw a support resistance lines, not a single line, a double line. So the double line itself is really important for us to draw, and I'll just color that red, that these two horizontal lines, just to give you that idea that these are the area of resistance. Okay, so it's based on these peak right here and the longest wick as well. So just to capture all the price. So now we have got a zone made up by the two resistance lines to tell you that this is where prices would find it very difficult to pierce through. Maybe a reversal would occur anyway within these two lines. Now, when you've drawn the two lines, exactly the reversal have happened within that proximity of these two lines. It basically reversed at 1725 exactly there, when we look at these two lines drawn based on these peak. Okay, so as it comes lower for the price of gold, we're talking about the daily chart. There's a bit of a short-term type analysis right here, just to know at this moment of time what could potentially happen between 4 hours and 24 hours. Okay, what could potentially happen is a potential for a price to drop a little bit more and then to find a support area. I will just show you on the closing price or the opening price of a bullish or bearish mother candle. So I'll just mark the support area as blue. Let me just change that. Okay, so now as prices as price were to go down, let's say if they were to go down and then the bias is to the downside, then it would actually travel along this mother candle's body right here. And the closing price of this mother candle is here, and that could also be a support area. Okay, so we want to mark this area here as a potential support. That's the body of that mother candle, bearish mother candle. We also want to mark another line based on the wick right there. So we would get a zone. So this is basically two lines that acts as a support or are very strong support, and that has been proven by this mother candle as well. This mother candle has opened its price and its lowest prices as well, and at the zone between the two lines that has been marked as support. So you could see that there is a possibility again for the price to fall and reverse at this area again. So for those who are selling, and then you look at even on the daily chart, the weekly chart, let's say later on as well, the price of gold is falling and falling, make sure you are alert or being kept aware of the support area, which should actually be area to exit before it reaches these levels. So it's better for prices, at 1701, 1702 onwards, maybe to exit at 1702, for example. Yeah, that's basically it. So at this moment of time, if you're selling, well and good, but just make sure you exit before 1702, or if you want to just let it fall a little bit more, then before 1697 as well. Okay, so you've got two areas, could potentially be your take profit area, but at this moment of time, a slight fall is actually expected as well. Now, as it goes upwards here, and you want to know whether it would actually fall or reverse, then it's probably best for us to insert the oscillator, the stochastic. So we go to oscillators and then stochastics, just to look at whether or not there's a divergence, the opposite thing that is happening between the candlestick and also the stochastic itself. Now, on the daily chart, it's quite clear. You see the high right here, and you can see that it's a slightly lower here slope on the high to the next high for the gold. But then this is on the daily chart, and then if you do the same from this area here, this one here is showing like it's got a divergence right there, because here it's a slope, clear slope to the upside. That is almost like a downward slight slope to the downside. So it does not match these lines that I'm drawing on both peaks, right? The higher high or the highs. Now we've got a divergence, meaning that the reversal could potentially happen to the downside, especially. Okay, there you go. That is basically it. Okay. I hope there's no questions or anything like that. No questions. We shall end these sessions this session quite soon. But also we have talked a little bit about NZDJPY as of yesterday. I've given the signal of NZDJPY as well. I think it has hit the take profit, as you can see right there. It went even higher as well. We've got loads and loads of wicks at the moment being caught. Price of NZDJPY has been caught at the area between 50 EMA line and also the 100 EMA line. The 100 one is this one here, and then the 50 right there. So we have drawn several lines, and it has actually appreciated exactly on these lines as well, which is a very good thing. At this moment of time, maybe a bit of a sideways going on, sideways type market, as you can see very clear. And that's awaiting for some potential breakout, of course. And yeah, this is basically what's going on at this moment of time. We should be looking and monitoring at news and various other fuel of the market to look at where the trend could have actually been directed towards to, right? So there you go. All right, too early to tell on the NZDJPY, but for the Australian versus the USD, looks like it's daily chart, very clear downtrend. It's probably best to clear out all the lines right here, which I'm doing. There we go. All right. So we have got this movement, high lows, lower highs, lower lows as well. If we start off with the 1 hour, we're looking at AUD USD at this moment. Now it's got sideways. I've mentioned that already on Monday. We were taking you through this triangle type movement with the AUD USD. As you can see, you can draw that like that, and then you can draw another line here. Make sure you touch as many bodies as possible. Okay, right here. It's broken out, in my guess, at this moment of time. It's broken out already from that triangular type pattern that I've just drawn there in trend lines. So you got one trend line right there, and I'll just move this a little bit downwards. This is on a 1 hour chart. Now the center point is also very important. You know, when you get a cross like this on the trend lines itself that you've drawn, try to look at the center point here and look at how significant that is. That is like a middle side of it. Now, what potentially could happen on the 1 hour chart is because it already has broken out of that trend line, the uptrend line there, it could potentially come down a little bit more depending on the candles it wishes to follow through on the path. A bearish type, got loads of bearish candles right here, and to actually come down a little bit, but then to reverse and go back to where it has broken out from along this trend line, and then to have a nice flow of fall to the downside. That is usually quite common to look at that when we have a triangular type formation right here. So there you go. Any questions? If no questions, then we shall end the session for today. Any questions at all, guys? No questions, I would think. Okay, good. Let's now look a little bit. We have covered NZD, AUD, USD as well. I think that's all we have for today, but probably just go very briefly on the Euro USD once again, and it does actually look like it's retreating right there. We've got these three lines as your resistant area. Daily chart as well is looking more pressure to the downside. We've got more and more lower highs right there. This one here is much lower as well, so it could actually be a potential downward type movement. So maybe to have the consideration of drawing a ABCD pattern with your A point right here, B, and projected C point. Now on the Fibonacci side of it, it's close to, I think it's in between 61.8 and 78.6. If I move it down here to this area, it's a not really nice one. I think let's stick with this one right here. There we go. So we've got A here, B here, C around here, and then more to come down. Now, we don't enter the market unless it crosses the centroid area for the pattern, and also entering it based on price psychology or price psychological numbers as well. Okay, guys, I think that's guys and girls, I think that's all I have for you guys for today's midweek review on Wednesdays, and I think we will be seeing you again most probably on Friday session, and Friday session starts the same at 11 a.m. and the same goes for the rest of the webinars on Mondays and Wednesdays. Now, we are expecting more movements, of course, on Friday, because you don't want to miss out the Friday's commentary by myself and also analysis on the market, because it could potentially be a volatile day, mainly due to the NFP. It's an NFP trading day, so non-farm payrolls going to be out on Friday. It's the first Friday of this month, and this is when it will be announced most of the time, on the first Friday of every month. Okay, guys, so that's basically it from me to you today, Wednesday, the 5th of October. So we will be with each other again on Friday, the 7th of October. So enjoy the week, and have a great week ahead, and we'll see you guys again on Friday. Thank you very much. Bye-bye.